Apple, Nvidia, and Meta. These names represent trillions in market value, dictating global capital and owning the digital infrastructure of our daily lives. But those gleaming headquarters project a permanence that the data contradicts. These empires hide razor-thin margins, fragile loyalties, and dangerous geopolitical dependencies. Public success metrics, like trillion-dollar market caps, often function as facades. On the floor of the New York Stock Exchange, investor hype over the artificial intelligence boom inflates valuations, while masking long-term structural risks. We are investigating the specific, hidden mechanisms that turn these giants into liability traps, exposing the fault lines that could dismantle them overnight. A giant's true endurance depends on how successfully it manages the existential threats it hides from the public. Amazon presents the image of a highly profitable logistics empire built on the physical delivery of millions of items to your doorstep. In reality, that retail operation frequently loses billions. The cost of Prime's rapid shipping logistics alone often wipes out the company's retail margins. This chart compares Amazon's revenue streams. The massive column is retail, making the smaller AWS segment look like a footnote. But for operating profit, AWS becomes the lifeline. It generates over 60% of income, the cash engine preventing retail's collapse. Broadcom projects a similar image of industrial scale, positioning itself as a cornerstone of the global semiconductor market. Their growth comes from a massive spree of debt-fueled acquisitions rather than internal innovation. By borrowing billions to buy competitors like VMware, they've created an empire that relies on raising license fees to service its interest payments. The massive footprint of these operational behemoths masks a reality of high-interest debt and heavy reliance on secondary tech ventures. Nvidia sits atop the AI era with a multi-trillion-dollar valuation built on pure hype. They provide the hardware for the modern computing boom, yet they are more vulnerable than investors realize. Despite their massive market cap, Nvidia does not actually own the factories that manufacture their chips. Every order for their high-end AI hardware funnels into one specific manufacturer, TSMC. All of Nvidia's physical production is concentrated on the island of Taiwan. This bottleneck is a single point of failure. A localized disruption or a shift in geopolitical stability would instantly paralyze Nvidia's ability to deliver its product. That multi-trillion-dollar valuation rests entirely on the continued stability of a single island and the dangerous assumption that AI demand will never plateau. Consumer brands like McDonald's and Coca-Cola maintain their power through historical nostalgia. They use generational loyalty to ensure customers keep returning, regardless of the competition. This emotional bond provides a buffer while the companies struggle against new health regulations and consumer shifts that threaten their sugary, high-fat core products. Modern social platforms engineer their products for addiction. Meta's algorithms prioritize dopamine triggers to keep users scrolling, maximizing ad revenue through constant engagement. This strategy has massive consequences. In early 2026, Meta was ordered to pay nearly $400 million in damages for harms their Instagram platform caused to youth mental health. Apple uses a similar psychological lock-in. By building a closed digital ecosystem, they make switching to a competitor so difficult and socially penalizing that customers feel forced to stay. The world's most successful brands survive by exploiting psychological vulnerabilities, using them to trap consumers in a loop of dependency. Modern corporate power sits on two brittle foundations. On one side, speculative investor hype creates unsustainable valuations. On the other, consumer habit struggles to survive shifting cultural reality. These financial foundations shift on a knife's edge. Investors are anchored to the volatility of the next boom, while consumers find themselves held in place by digital ecosystems that penalize them for attempting to leave. Neither a massive bank account nor a globally recognized logo provides structural invincibility. Every modern giant is a fragile facade. They sit just one regulatory crackdown, geopolitical crisis, or shift in public trust away from complete extinction.